New listings volume and the weekly sales volume are now running at a slightly better pace than the same week last year. Both have been below 2022 all year long. When we started the year, we were running 30% fewer sales than last year. But we've now finally recovered the pace, and the data now implies that 2024 sales rate will be greater than this year. I described it in last week's video that this may be the bottom of the housing recession. It's only 1 week later, but at least the pattern continues to confirm this week. When I make this projection, we're not losing ground anymore, that home sales for 2024 will pick up. That's based on a big assumption that mortgage rates don't substantially rise from here. I don't forecast mortgage rates, and they absolutely could rise. So if rates rise substantially, then the forecast is for home sales to fall further. Note that we're talking about the number of home sales, the transaction count. I'm not talking about home prices in that statement. Home sales look to improve in 2024. We're probably at the bottom, assuming mortgage rates don't jump up from here. The home prices have their own forecast, and we actually have a lot of data for 2024. A lot of the leading indicators are forming up nicely now. And on this Thursday, we will have our November webinar where we'll dive into all that we can already see for 2024. Inventory forecast, sales volume, home prices. We'll look at a bunch of local markets too, because some local markets are under pressure with lower demand, increasing supply, and maybe further falling home prices. So that's this Thursday, November 16 at 10 a.m. Pacific. There's a link in the description below to register. If you need to help people understand what's coming, I recommend that you attend. These are limited to 1,000 attendees. You can still reserve your spot now. Click that link below and register for Thursday at 10 a.m. Pacific. At Altos Research, we track every home for sale in the country every week. We track all the pricing, all the supply and demand, all the changes in that data so that you can understand it immediately as it happens. I'm Mike Simonsen. I'm the founder of Altos, and let's take a look at the latest U.S. housing market data for the week of November 13, 2023. As we suspected last week, the available inventory of unsold homes has indeed topped out for the year. So there are now 567,000 single-family homes on the market around the U.S. As buyers pulled back this fall with the latest mortgage rate jump, inventory grew. The total count of homes on the market inched back closer to last year's level, and now we're at the same level, same number of homes as were on the market last year at this time. Inventory has been climbing very late in the year. November inventory increases are very unusual, and it really reflects the unaffordable situation for home buyers right now. But this fall's inventory increase has completed, and we'll now see a normal decline in the number of homes on the market until after the new year. In this chart, each line is a year here. So see how the dark red curve has reached last year's level. Inventory will now begin to fall each week through the end of the year and into the new year. And we will finish the year with just slightly more homes on the market than at the end of 2022. Remember that many markets are still in pandemic lows of available supply of homes to buy. And so I'll spend some time on Thursday in the webinar exploring which of the markets have been most sensitive to the crazy mortgage environment and which are holding up the best. As I mentioned earlier, we are at a threshold of new listings and sales volumes. So each week is going to be easier to compare with last year's really low levels. So each week, we're likely to report year-over-year growth in the weekly sales. Last year at this time, new sellers each week were just slamming on the brakes. So this year, we still have very few sellers, but they're less panicky than they were a year ago. And so the transaction volume will start to tick up compared to last year. This is a view of supply. In this chart, each bar is the total number of new listings each week. The taller the bar, the more sellers. I've included the dotted lines here for annotation so that you can see that this week, 66,000 new listings. Last year, there were only 62,000. Of the 66,000 this week, 11,000 are already in contract. Those are our immediate sales. The light portion of the bar here are the immediate sales each week. They were listed, they had buyer offers, they went into contract within a couple of days of listing. So, yes, we had more sellers than last year at this time. This is good because it means more selection for buyers, and ultimately it means more sales transactions. There are signals to watch here in our immediate sales data, especially if you have a bearish hypothesis about the housing market. So if you are worried that we'll see a flood of sellers next year, that will get out of balance with supply and demand, with more sellers and fewer buyers, if that's your fear, then we should be able to see those signals very quickly in this chart. And here's what I'll be watching for. See how in the second half of each year, new listings peaks in July and starts ticking down. Last year, there was a dramatic drop after July, right in the middle of the chart there. This year, the number of new listings each week was always low and trended lower. Because we had so few sellers, we by definition had very few sales. So signal number one is, do these sellers climb unseasonably fast? We want to see more sellers next spring for more sales in 2024, but how many more? So if this chart starts shooting up, it's worth watching every single week. I suspect in the spring it'll climb, but not too fast, but I will be watching to make sure. The other signal is how many of these new listings get sold immediately. So we'll be watching the light portion of each bar each week. And this week, we had more sellers than the same week last year, but we also had more immediate sales. So in other words, the buyers tended to lean into the new supply, and then that impact wasn't very big to inventory. So these immediate sales, they're not available inventory. They're already gone off market. So right now we see more sellers over last year and also more buyers. But if we watch this chart and sellers are rising, but the immediate sales are shrinking, that would be a bearish scenario to watch for. So we will keep our eyes out for that. The other way to look at demand is the new sales rate each week. So these are the new contracts pending each week. This week, 52,500 single-family homes contracts started, new pendings. All year long, the sales rate has been running fewer than last year. Recently, though, the sales has been no longer dropping year over year. And in fact, this week we had more sales than the week a year ago, slightly better. This isn't a consistent enough trend to call it sales growth yet, but it's an early indication of a better 2024. The sales drop each week. They will drop each week through the end of the year before resetting in January, total number of sales. And it'll be fun to watch if this trajectory is durable. Consumers are more sensitive to changes in mortgage rates than to the level of the rates themselves. So we had a couple of good weeks with mortgage rates dropping quickly, and the pace of home sales picked up. But again, like mortgage rates absolutely could go reverse and go higher and then slow buyers again. So you can see the uptick at the far right end of this chart. The dark red line here is this year. Last year, the bright red line. And all year long, the dark red line has been running below 2022. Fewer sales all year long. We started with 30% fewer sales at the beginning of the year. Now it looks like we'll end the year on pace or maybe slightly better pace than last year, setting 2024 up for increased home sales over 2023. Price reductions have also topped out for the year. Currently 39.2% of the homes on the market have taken a price cut from their original list price. That's a lot. It's reflective of weak homebuyer demand and really unaffordable conditions, right? The market has fewer price cuts than last year at this time, and that actually bodes well for future home sales prices, like the transactions that have not completed yet. Uh, there isn't much signal in the data that implies that home prices will fall the way they did a year ago. Again, consumers reacted to changes in rates rather than the absolute level. So mortgage rates are higher now than last year, but they changed last year. They changed faster. Last year, mortgage rates fell very quickly in November and December, and that freed up a lot of buyers in the spring. As a result, you can see the dark red line, the price curves at the left end of the graph here, fell very quickly. That was a solid indicator that home prices were no longer falling this spring. That signal took many casual observers by surprise. So this will be an important indicator to watch after the holidays also. The median price of single-family homes in the U.S. is now just a hair under $430,000. Home prices are running a couple percent, 1% to 2% higher than a year ago. That pattern looks like it'll hold through the end of the year, and we'll see how the buyers feel about affordability after January 1. I've included the dotted line annotations in this chart so you can see how prices this year compare to how they were faring at the end of last year. And last year, the home prices were adjusting down much more rapidly than they are now. So the trends indicate that they'll continue that direction. There's nothing in the data that points to home price strength, of course. Like if mortgage rates were to fall substantially, like back under 6% or something, I could imagine that would spur demand, inventory would fall, and home prices would rise. Those signals are not in the data per se because mortgage rates haven't fallen. So that's just a scenario for home buyers to keep in mind if they're on the sidelines waiting for mortgage rates to improve. The buyer competition will improve, and that will probably drive up home prices if we get a cheaper mortgage scenario. If you need to help buyers and sellers see this change first, you should join us at Altos. People need help understanding this fast-changing market, and they need to hear it from you. So go to altosresearch.com, book a free consult with our team. We'll help you know how to talk about the market with your clients and prospects today. There's a link in the description below to join us at Altos. Click that, and let's get started. Don't forget this week's webinar. We'll spend an hour on all the leading indicators for the 2024 housing market and all the local markets too. These webinars are limited to 1,000 attendees, so click the description below to reserve your spot now. All right, more next week.